All right, Blake. So here's a story from Fox News, which is basically saying that delinquency rates on loans opened in mid 2021 resemble borrowers with a credit score usually on average 25 points lower than pre pandemic levels. Now, what does this mean to you? And what does this show about the overall economy?
Well, to me, the first thing that it shows is that the credit system is broken because they're telling us that people have a 750 that actually have a 725, or they say that they have, for example, a subprime loan, right? That's typically under about 660. So really, the people that were prime loans at 680 or so on the credit score range were really subprime loans where they actually probably wouldn't have qualified for a lot of these loans. So to me, it shows that the credit system is broken. And, I think because of the pandemic, with a lot of the money that was in the system, it seemed like people had more money to spend, more money to pay back their loans with. But as we see, that really wasn't the case.
Well, here's the thing that I'm most curious about, right? So, delinquency rates, that's never good to be delinquent on payments, right? That could cause foreclosure, among many other things, repossession with different assets like cars. But here's my question: if the Federal Reserve has to continue to raise interest rates in order to bring down inflation, and we know that with borrowing costing more, that would probably cause a layoff and also less money in the overall economy for workers. How are workers going to be able to pay off some of these loans that they took whenever they had more money in their pocket around 2021 when we were discussing?
Yeah. So potentially the good news for some of these borrowers is whenever they um, locked in their loan, they locked in at a lower rate, 3%, 4%, somewhere around there. But the bad news is if they're going delinquent on these loans where they're paying several $1,000s less, well, when you're talking about 7, 8, 9%, depending on what type of loan it is, it's basically impossible for them to stay, within their payments on those larger loans. So,
Hmm.
yeah, to me, that it's definitely something that shows that the economy isn't as healthy as you might think. Um, I know people have been hearing about layoffs rippling through different types of jobs and different types of career paths. So I won't say that our economy is in disaster zone yet, but we're definitely seeing it on a downward spiral. And when that happens, there will be more and more loans that won't be able to be paid back. And if we follow that path to what 2008 was like, we'll see a lot of homes being foreclosed. We'll see the first thing to go actually will be cars. Cars will be
Yeah.
repossessed. Then we'll see RVs and boats and those items. And then the last thing to go typically is real estate, the housing. So we'll see if we're able to avoid that housing bubble bursting. But whenever loans are delinquent, it's inevitable that you're going to have some foreclosures.
And it especially sucks even for people who are making their payments, right? When the bubble bursts, right, there's going to be a mass influx of these assets hitting the market, banks trying to save whatever they can, people trying to save whatever they can, so that way they don't have to go completely bankrupt. And that will usually bring costs down and prices down for those who do hold these types of assets. One last thing to keep in mind, and I really see this trend coming the last couple of years, which is I guarantee you that if this does burst and if more and more loans become delinquent, you're going to see the unification of families like we've never seen before, where extended family, grandmas, grandpas, we're going to be moving in and really having multiple generations in the same household. We've seen this in other countries that have had similar problems, like Venezuela, right? And I truthfully believe that this is something that we'll see in the future. So let's hope that these delinquency rates go down. Let's hope that this all levels out. But yeah, something to keep in mind is if the Fed continues to raise rates as expected, we could see higher unemployment with strong delinquency rates. That's not good for the overall economy. Blake, thank you so much for being here.
Thank you. Appreciate it.